Welcome to this analysis of the November 2014 strategic pre-scene. We're going to really get to grips with this pre-scene in this series of videos to really understand it, to think about the types of issues that are going to come up in the exam based on this. So you've got full, deep understanding of this pre-scene and you can really deal with that pre-scene question, that 50-mark question on each of the E3, P3 and F3 papers. That's the goal, is to really get you in a strong position, ready to deal with those questions. So let me start off by just introducing myself in this video series. So my name is Nick Best. I'm the Managing Director here at Astranti Financial Training. I've been working on strategic level CIMA subjects now for 17 years or so. I've taught E3, P3 and F3. I've written materials on all of those. And taking that forward, I'm one of the best recognised T4 tutors that there is around and do huge amounts of work on T4, bringing all these together. So, this sort of CIMA strategic and T4 pre-scene is really my speciality. I've spent the last 10 years working on, including writing the official CIMA learning system, but with the examiner on T4. So these pre-scenes, I've put a lot of work into understanding pre-scenes and thinking about pre-scenes and written lots of my own as well. So hopefully I can share that knowledge with you in this series of videos to really help you get to grips with this new pre-scene that we've got. In fact, the final strategic pre-scene until the new syllabus comes in. So let me talk about what this series of videos are going to be. We're going to start off with a strategic review of all of the subjects, and that strategic review is going to focus around E3. We're going to look at the E3 models, PEST and 5 forces and Ansov's matrix and generic strategies, and we're going to really get to grips with those and pull that together into a full strategic analysis with each of the models completed. So we're going to do that. We'll probably take about 3 videos to go through doing that E3 analysis. Then we'll go on and do a video on F3, and we'll look at everything from a financial analysis point of view. Think about where the money's coming from, and we'll have a look at the financial statements. In those E3 ones, we'll have a brief look, but we won't look in detail, but we'll have a look at the financial statements and do some financial analysis on those. And we'll think about where finance is coming from in this business and other issues that we think might relate to F3. Also looking at the types of questions, type of F3 questions that are most likely to come up given the pre-scene. There's very often lots of clues in the pre-scenes of the types of questions that are going to come up. So that gives us a strong position to be able to try and predict what those are. Then we'll do a video on F3. Think about what all the risks are in this business. We'll also look at some of the any issues there might be in relation to foreign currency, which is a big part of that. IT is another part of the F3 syllabus, although we'll do a lot of work on risk, because I kind of hope you know by now that in the big first question on P3, very often risk and control is a big part of that. So that's going to be the biggest part of what we're going to be analysing on this pre-scene. I'm also going to do an analysis of what I think are the most likely issues in all of the different subjects. So I've got a separate video where I go through each of the 3 subjects, and I will say, well, I think this most likely to come up is this and this and this. Hopefully that can help to guide your revision, but also help to guide the way you're analysing the case study. So you're thinking about those particular issues. In the past, those most likely issues have been reasonably accurate. Of course, I can't promise that they're going to be accurate this time around, but normally there's so many good clues, and you'll see this as we go through. There's some really good clues as the types of issues that are just going to come up. And in actual fact, it's much easier to predict for these case study type questions what's going to come up in the real exam than ever it is in any other subject, because we've got the clues in the pre-scene. So I'm going to tell you what the clues are that I'm picking up on, use my experience to share with you what I think the most likely issues are going to be in the exam. In addition to those pre-scene videos, I've also got a range of guidance for you in relation to how to go about passing these strategic papers. People really struggle with these strategic papers, or no, actually some people don't, but I've seen lots of people over the years I've been teaching this really struggle. And so I've got a guide for you that talks about what the examiners are expecting at this level, the key reasons that people fail, and most importantly, what exam technique, well, how do you write answers that score marks in the exam? Because I see so many people approach these exams and they're writing points in a way that just simply doesn't score marks. And there's no doubt strategic is much harder than managerial operational level. You really need to have superb exam technique to do well. And I see lots of people fail and fail and fail again, not because they don't know the material, but because they don't understand the exam technique they're supposed to use. Finally, how to prepare for strategic level. What I've also got for you as well is an E3 guide to all the models. So I've done a video for you which basically takes you through all the key E3 models. The reason I felt that was important is that I've also got another video which is the full strategic analysis, where I go through each of those models once I've finished reviewing each of the different each of the whole of the pre-scene. And so that hopefully guides you into a bit of revision on those models before then you're really thinking about how that relates to the pre-scene. So, big series of videos, 9 videos in total. I hope you find those. This series useful. So let's get on then, and let's start to look at the pre-scene itself, and let's start to really draw some key points out of that pre-scene. Okay, so here's the pre-scene itself then. I do suggest that what you do is you print off a copy of your own. It's always worthwhile, before you were going to watch my view of this, actually going through and reading a section, the section I'm about to do, and just think of your points. There's a real benefit to doing that, which is that, I'm going to give you my view and my experience and expertise, but I'm not going to get everything. There's going to be other ideas here. I know when I teach these with classes that, I come up with my view, and it's always fantastic then when we talk with the class and discuss this, and we discuss and bring out all the views that everyone's got. So it's very useful for you to look through, think of your ideas, and come up with those. And so that's what I would recommend you do right now, is take the pre-scene, go through the first 4 paragraphs, which is what I'm going to cover in this first video, and come up with all your ideas in relation to P3, E3, F3. This video is mostly going to be the E3 models I'm going to focus on. So that would be what I would advise you to think of and focus on. Read that through and then come back to this, and then let me share my view of this this section with you. Okay, so let's go through this section by section then, picking up some of the key points. So, we just start off. Why it was formed in 1900. It's quite an old company. It's been around a long time. It manufactures and sells, and here's my first key point for you: top quality confectionery. So confectionery is primarily focused around chocolates. We see a little later on they moved into sweets and so on. And so first point, and what we're going to be doing as we go through this is thinking about the various different business strategy models and how they relate to each of these different elements that we come in here. And the first thing that comes to mind is Michael Porter's generic strategies. Do you remember Michael Porter's generic strategies? See if you can remember them before I tell you them. 3 key ones. Okay, we have got cost leadership, we have got differentiation, and you should be either a cost leader or a differentiator, one or the other. And then in addition, you need to decide what focus you've got. Is it a narrow market focus or a broad market focus? Okay, watch my summary guide for more details on that model that is in one of the later videos, or refer to your notes. But critically in this particular case then, we are differentiating on quality. Okay, and so that's going to be really critical to this business and critical to its success, is to continue that quality. Now, from an exam point of view, what I often find is that examiners tend to produce exam questions that will be in some way contradicting their key generic strategy, which is the basis of their success. So look out for issues that's going to bring quality down. Perhaps there's some production issue or some problems with material or some element over production systems or the way that transport, the products are transported. That means they don't arrive, maybe all the chocolate's melted on the way. Or anything that's going to compromise quality is a big issue for this business because that's a real basis of their success. And so therefore, an issue around that quality and the importance of that, definitely see that coming up in the exam. Okay, my next point then is on the next line, which is that for many years, Y has remained a successful company and become a household name. So let's firstly pick up on that successful company. Now, from a successful company, one thing I often find is that students tend to get a bit over exuberant when they're writing their answers. Very often in pre-scenes, T4 pre-scenes, strategic pre-scenes, the business is a relatively strong business. And what it's telling us here is that this remains a successful company. Now, obviously, as we read down and see later, we'll look at their strengths and weaknesses, and no doubt they've got both, okay? But normally what we can say is that they have had a successful strategy. So when we're thinking from an E3 point of view about developing a business strategy, we need to be thinking about how much change is needed. And so if what they've been doing so far has been successful, then that means there's only minor change in the current strategy which is required. And as I say, we'll have to go through and read the whole scenario to find out what we think that the strategic change is required. And when we get to the end of on the video, where we analyze the whole of the strategic analysis, I will get to the end and I will say, well, this is how I would take the business forward. But in my mind already, I'm thinking, well, they've been pretty successful so far. I probably don't need to change too much. There's going to be, what are they doing at the moment? And let's keep that going with probably 1 or 2 changes in strategy as my way forward. Now, this is crucial for you in the exam because it's very, very common in this section A for you to be asked to be maybe given some strategic options, be asked to analyze those and evaluate those and decide which to go with. And that's very much the focus of E3. It's how E3 is more than E2. E2 tells you about strategy in the theory, but doesn't actually, it doesn't go on to the kind of Ansof's matrix side of things, which is where you're starting to generate strategic options and decide on those options. That's the real focus of E3. So we see then that in E3, it's a very, very common question. So in your mind then, you'd be at least look at those options and think, well, what are they doing at the moment? And if that's already been relatively successful, perhaps we don't need to go for that really big, risky new project that's a possibility. Okay. Now, the second thing that comes in here is this idea of them being a household name. So I'm just going to pop over in the corner here that branding is crucial. It is really key to their success. This household name, they are well recognized. And what I'm also going to do, of course, is I'm going to link this through. Let's put it in somewhere near this just here. I'm just going to put an S. S stands for strengths. We're going to be creating a SWOT analysis as we go through these videos. And so that's going to be one of their key strengths is that they are a household name. They're well recognized. They've got a well recognized brand. And therefore, let's just put in here household name. And actually, you could be a household name for all the wrong reasons. So they haven't actually said as of yet that it's a really high quality brand, but I'm kind of thinking that that's what the examiner is getting at. It's the kind of product that everyone knows. Branding is really going to be really important. Marketing is going to be really important to this business. And okay, so that's a key element. Again, could easily be a question around marketing, question around branding, building the branding up, a kind of E3 type of question that we could see there. Okay, next then is particularly throughout Europe. Okay, so it's sort of suggesting that yes, overseas a bit. Okay, and we see a little bit further down that they do sell overseas. Okay, if we go down here, it says Y exports its products throughout the world, but primarily in Europe. Now, a couple of things come to mind about this. The first of these things is we can be thinking about here, an opportunity is that, well, could we expand our overseas markets? And I'll put the op in there to represent opportunity in the SWOT analysis. Could we expand beyond Europe and build beyond Europe as a good opportunity? We could, I mean, there are lots of examples out there of companies expanding, perhaps quickly through acquisition. We could perhaps, let's put just a note over here on the right hand side. We could go, e.g., back in 2010, Kraft, which was a US confectionery company, purchased Cadbury's, big European and particularly UK confectionery company, and in one fell swoop they were the largest player in the UK market through that acquisition. And so actually some form of expansion overseas, if we suddenly find out in the exam, and I could easily see, I think if I was writing an exam, this might be the kind of thing I might do, is some opportunity to purchase a company overseas and make a big impact in some new growing market. Perhaps it's going to be maybe China, or it's going to be in some other high growth industry, high growth market. Apologies. Therefore, and we've got examples of that happening in real life. So that's not a bad strategy. Typically, if things have been happening in real life, then you've got some extremely knowledgeable people that know this industry that have already gone ahead with that strategy. And so for us or you, then that can't be a bad strategy for you to advise. Okay. So throughout Europe, let's come back to this Europe point then. So what then comes to mind for me is the PEST analysis. Now, as I hope you know, PEST stands for political, economic, social, and technical issues. And sometimes you see it written as PESTL with environmental and legal on there. I prefer just the simpler PEST. Either is perfectly fine, in which case environmental goes under S. So social, environmental, and legal goes under P as political and legal. So that's the way I'm going to deal with this here. Either is perfectly fine, of course. So let's have a think about Europe from a PEST analysis point of view. Okay, so here is my PEST analysis, and basically I'm going to build up all of the different strategy models as I go through analysing this case to produce this full strategic analysis. What I should say is anyone that's for anyone, the full strategic analysis is available as a free download if you go onto the website and sign up to our strategic area. So whoever you are, whether you've bought the full video set or not, you can get all the finished version of all these models. Okay, but as you can see, I'm just getting going on this now, and we're going to start to build up our PEST. Anyone that's doing this themselves and you haven't got the remainder of the series because you're just watching the free video on YouTube, then of course you can do this yourself. You can build up your own model. Of course, I'd love it if you carried on and worked with me through building these up. But you can do that yourself and build up all the models just like I'm doing now as we go through to build up your full analysis of the case. Okay, so now the first thing that comes to mind then here is that we're in Europe, and therefore we're going to have European laws must be abided by. And there are going to be a huge number of laws on sort of food safety. I call it food safety, but it's the element. I mean, it's really important that the food is fresh and it's not contaminated anyway, and that it's safe. And one of the problems with operating in lots of different countries is, of course, you've got different legislation in different countries. Now, we find out later they're in the Eurozone. So within the whole of the EU, laws are going to be to some extent similar. Even then, there are differences country by country. Of course, when you then go overseas, then you've got perhaps different laws again, and therefore you must abide by all the different laws as well. So let's put here and overseas. So going into a new market, we'd need to be aware of what the food legislation was, and therefore make sure we abide by that. I think while we're on Europe, it's hard to just ignore at the moment is that Europe as a whole is recovering very slowly from the recession. You know, the kind of Great Recession of 2008 onwards, and many countries around the world are recovering, but a lot of Central Europe in particular has been very, very slow to get out of that. Now, why is that important to us? That may hit high quality products more than low quality ones. Why is that important to us? Of course, because of Porter's generic strategies. We focus on these high quality products, and therefore that could hit a high quality confectioner more than someone that was producing the cheap and cheerful versions. And so now that's important. You would hope that over the next 2 or 3 years that the Central European economies will start to grow quickly. In the UK, growth has really taken off again now. And you'd be thinking that in the next few years, you would hope that Europe as a whole would grow in that way. I think it's also worth mentioning that although that's their main market, perhaps there are opportunities for growth in some of the stronger growing economies. We could put here. So opportunities for growth in faster growth markets, I'll put them. So it might be, just as an example, China. We know that the kind of Chinese growth of the Chinese middle class in the last 20 years has meant that there's a huge market in China now for higher quality branded products. I mean, I'm thinking very much so with things like watches and fashions and cars and things like that. But actually that can lead over to this kind of product as well. And so therefore, you know, perhaps there's opportunities for growth. So we've got elements of that. I think it's also worth mentioning while we're on this pest analysis that it does say in a moment, and I won't bother going back to the case, but it does say that they are in the Eurozone, but then there will be exchange rate issues for transactions outside the Eurozone. Okay, and of course there's risks, and we might think of that in relation to P3 more than anything else, although I can come back to P3 later on in relation to changing exchange rates. Of course, for the P3 and F3 exams, exchange rates, you're almost bound to get something in relation to exchange rates in one of those two papers, but definitely they've left themselves open, the examiners, to test exchange rates by making it a global firm operating internationally whilst being in a particular country. Okay. Okay, we've not had so much so far on social or technical. I think what I might just put on social, while we're kind of thinking Europe and kind of globally, given that they operate internationally, is different tastes in different countries. So particularly as you start to expand into where there's different cultures and so on, people will already have certain brands that they are loyal to, but also certain tastes in terms of the type of product that they have. Let's put taste/loyalties. So that's going to be a particular challenge if you're going into new markets, particularly outside their core market of Europe. Good, so that's enough on the pest analysis for the moment. Of course, as we go through the rest of the case, we'll add more to this and then give a full key sort of summary at the end. Let's go back to the case study then. Okay, we're only 3 lines in. I've been going for ages here, haven't I? Okay. So there's a lot. It's only 4 paragraphs here, but there's a huge amount in these first 4 paragraphs. Huge amounts that we can think about in terms of analysing the business, the types of questions that can come up and so on. Okay, so next we go on to they sell their products in their own high street stores. Now these stores will need to be managed and controlled. Some of them which it owns, that means that that's therefore going to be an asset of the business, which could be useful to help raise finance on from kind of an F3 point of view. Talks about some which it leases. Okay, I could see a kind of F3 type buy versus lease type question. There's an almost sort of suggesting there, aren't they? Oh, buy it, lease it. Okay, I'll kind of come back to that when we talk about F3. I'm supposed to be focusing on E3 in this video. Okay, but I could easily see that being there. But we've got these assets on the high street that we could potentially we could sell. They're a potential liability in the sense that we've got them there, and we are going to have to continue to maintain them even if we decide to pull out of our own high street stores. But it appears as if that's been the focus of success over recent years, is this focus on high street stores. So yeah, probably a strength unless we find out elsewhere. Now, anyone that's based in the UK will have heard of Thornton's. And Thornton's, for anyone that doesn't know, might be worth you doing a little bit of research on Thornton's, is a UK-based confectioner that operates through its own high street stores. And so just worth being aware of companies that might be similar in nature. And it's worth perhaps, even if the only thing you do is you go to their Wikipedia page and read what's happened to them, you'll find out things, for instance, that in 2011, they closed, or they made plans to close up to just over 120 stores. And it's that kind of information that you think, okay, well, look, if the examiner's got a company in mind, maybe that's the one, maybe one of the strategic options is going to be store closures. So it's that kind of thing. It's that kind of useful information that you can get. Again, we can maybe, as we read through the rest of the case, we can find out what they've done in relation to their stores, but that kind of information can be useful to you as a possible issue. Okay, should we close the stores or not? Should we do lease versus buy? These are the kind of exam questions that can come up. Okay, they've got over 3,500 employees. That's a lot of employees. They all need managing. There could be HR issues in there potentially as well, because obviously the workforce is going to be really important. I mean, just as an example, if we were to end up closing the stores, then obviously it's going to have a big impact on staff and redundancies. And, we have a social duty of care to those staff to consider them and their views and try and keep as many in work and give them good redundancy pay if we were laying them off. Or, there could be all manner of different HR issues that could come up as a result of that. So let's bear that in mind too. Okay, so again, down onto the next line there. So the products are distributed through a multi-channel network comprising Y's, here we go, own stores, great. Online business, okay, it's good to see that they've moved into the current age and they've got an online business as well. Franchises and retail partners. Okay, so that's interesting. So look, we know from up above, up here, that the high street stores has been their main focus, and that's probably going to be a key focus from going forward. But no doubt in this modern age, online business is going to be an increasing part. I could easily see a question on that. But we also know that in E3, the whole idea of partnerships and franchising is a big part of the syllabus. And so therefore, again, the examiner's opening up the opportunity to test those things. By doing that, all of those different business models, I mean, what's a funny thing is they've got lots of different business models here, from franchising through to their own stores and online. There's a lot of different things. Our whole network management is going to be an issue, and making sure that all these different approaches to the market are working. And not only that, but they then all linked into the retail partners, which is really what it is that they supply confectionery to the large retail stores and supermarkets on a contract basis, but they also have their own brand label confectionery. So they will produce for the supermarkets who then will brand it as, I mean, if it was a UK supermarket, it might be the Tesco Finest, which is Tesco's top quality brand. And they are producing for them. Now, of course, one of the issues there, and we might just want to put a little question mark over that, is that does that reduce sales of the branded items? What's very likely to happen is that the own brand chocolates they're producing will be cheaper than their brand, the Y brand. And so therefore does that end up meaning that they actually lose sales on one side and they gain sales from selling those own brand things, but probably at a much lower margin than they would have done if they were actually selling their own branded products? And of course, you're not building that brand. And we know branding, we said at the start, branding up here is really important to them. So look, lots of companies do that. It's just something for us to bear in mind as one of the downsides of going down that own brand label production route. I think I might just finish off here by just putting a little S in here for strength, which is range of distribution networks. You know, they're not just reliant on any one. They've got a whole range of different approaches to market. If one of those is less successful, let's say the stores does become less successful and we find it's not so profitable, well, we can move into the other approaches. Okay, so we find out a little bit now about their product range. So they've got a wide variety of products. And I'm just going to say, well, broadly, I would say that was a strength. The wider the variety, they're hitting different parts of the markets, they're making different customer needs that like all these different ones, including, for instance, diabetic chocolate. So they're producing specific focus ones. And they've also recently expanded into producing other forms of confectionery, not chocolate, such as cakes and sweets, candies, as they've put them there. So with that in mind, then, wide variety of products. The customers have a strong regard for them. That means if we come up here, this branding, I said branding is crucial. It was a household name, but we now learn actually that we just come up here. Let's just think that in. Let's put in here strong regard. So yes, remember I threw that doubt in. Yeah, you could be a household name in a bad way. No, it's a good way. Quality is the focus. Links back to the generic strategies. Then we learn about them exporting around the world that we've already spoken about. And a wide variety of customers from corporate to individuals. So that's going to give us a bit more information then about Porter's generic strategies. So the Gen Strats is going to be a wide market focus. Do you remember I said right at the start of this video is that the generic strategies, you start with differentiation or cost leadership. They're not a cost leader, they're a differentiator. And you do a narrow focus or a wide focus. Well, the focus here is wide to a whole range of customers in lots of different countries, although focusing on Europe, but also with a wide range of products in the confectionery area. So it's wide focus, differentiation. That's the Porter's generic strategies in this case. And as I said earlier, particularly look out for any problems in relation to quality. And don't do anything that means quality will be compromised. Okay. So let's go on then. Another thing that we must do, a key part of E3 strategy is, E3 or business strategy, is to understand the critical success factors in the business, the key things that a business must do well in order to be successful. And we've got really a lot of clues in just these 4 paragraphs of what their critical success factors are. So let me put some of them down then. So the starting point then is production. Production must be producing of a high quality within the regulated environment. So meeting regulations. So that we've got good products within the law. I'm going to put here strong, well-controlled production processes is going to be really key to the success in this industry. Absolutely. I'm particularly focused on that quality as well. Next, we've learned about branding. So I would say we need to retain strong brand. That's the kind of goal. And that's going to mean what's critical to success then is continued good marketing and good advertising and continued good image. I'm going to put image and quality down here because what links through to the brand is everyone still regards the product as high quality, which links to the brand, that there's something about image, as in, let's say there was a PR problem, like there was a quality issue or there was contamination in a food product, we have to respond to that very, very quickly. It's really critical that we do. We can't have the brand tarnished by some quality issue or some particular issue over the health of the products. Next, I'm going to put down storage and distribution. We haven't learned too much about that, but what we do know is that they've got a whole variety of ways of distributing these products. We have to think that particularly chocolates have to be kept in a very controlled, refrigerated environment within certain temperatures. And so in terms of retaining the quality, the whole approach to going from the manufacturing production facility out to the shops, or let's say we're selling online. I mean, here's a challenge for you. How are you going to keep the temperature of delivered products, chocolates, that are being sent by post? How are you going to keep those within temperature controlled requirements so they don't arrive or melted? So these kind of storage and distribution issues are going to be really, again, absolutely critical to their success. Another thing that we did get out of this section was network management. And of course, by networks, we're looking at store management, we're looking at online franchises and retails. And I think in particular, store management. The whole process of training staff and managing stores and maintaining those, and linked through to the branding in terms of the quality of the retail outlets. High quality products have got to have a really high quality of service and a really high quality of store as well. So that is another particularly important one coming out of this section. Okay, and those are my main critical success factors so far. Finally, in terms of the models that I want to work on now, let's have a look at the SWOT analysis and start building. And primarily in this section so far, we haven't heard of a lot of weaknesses as of yet, but what we have had is a number of strengths. Let's note those down to start off with then. So firstly, we've got a wide variety of products, which are therefore going to help to meet a wide variety of customer needs. We can say that they are very high quality. Let's put of products, and then let's link that into the brand then, which is respective brand, which is a household name, which is as it's described in the case study. I think what I might also do is under the quality products put clear generic strategy. So from a strategic point of view, we always like to have companies that are not stuck in the middle. Do you remember Porter talked about being stuck in the middle without having a clear generic strategy? So we also know from a strategic point of view that's good. And I also want to put in here, they have been a successful company, which likely means good strategy and good leadership. Okay, which probably means the directors are pretty good. Hard to say, but we'll look at the structure of the board and all those sorts of things as we go through the case study. Let's put down assets as stores. I'm starting to get a few more. What I might do when I get to the end of the whole analysis is reduce these down. If you end up seeing that you've downloaded the one online and it's different from this, very often I'll probably keep most of these in, but I may end up changing them around and combining some together at the end to make it a little bit neater. I could end up with far too many strengths by the end. Okay. Anyway, so yeah, you've got the assets, the stores being assets of the business. It's useful from raising debt point of view because we've got assets to raise the funding on. Could be a weakness, we need to say. If we find that later on, of course, any of these things as we go through the case, we move them over and move them around. And this is what you need to be doing as you're creating your own strategic analysis. Put it in there and then move it around, sum it all up at the end. And that's what we'll be doing as we go through this process. There were a couple of opportunities in this section as well. So I just put in for the moment, let's put further expansion outside Europe. Seems an important one. I'm particularly thinking back to our pest analysis when we were looking at moving into the growing economies where there's a growing middle class, the kind of China, Brazil and so on, those kind of countries. And I think I might just add in here as well just put in here, particularly growing economies. On the threats, may well be foreign exchange issues. Because they're operating worldwide, and particularly if they do have that take that kind of opportunity, that could we could have impacts of operating in foreign currencies and the movement of different currencies, and obviously could present problems with transaction risk, for instance, going back to P3 and F3. Good, right. So let's bring this to a close then by just thinking about the types of questions that could come up from the sections that we've got so far. Just picking up on some of these key points, I could very easily see there being a question, an E3 question on generic strategies, a kind of F3, although we come on to this later, question on lease versus buy. I could see a question on should we close high street stores or not, because we know Thornton's did that and they've got a lot in this case, and we know they quite like to use those kind of real life examples in exam questions, so that could be a question. We could have an E3 type question on profitability analysis. Look, we've got all these different products here, and we could analyze the product profitability. That's a big part of the E3 syllabus, one of the few numbers sections. And you will find some numbers in your question 1. So if I was an examiner, I might be thinking about profitability analysis of those different ranges, or indeed profitability analysis of these different networks, so that you can then make a decision on which of those to go ahead with. Possibly the opportunity to expand overseas, I think, is a likely possible question coming out of here. So a number of key points that could hint at E3 style questions at this section. Good. Well, that's the end of the first video then. If you are watching this, this video is available for free on YouTube. And if you're one of the people just watching this on YouTube, I really hope that you found this a useful start to your analysis of the case. And actually, I hope you'll think that actually, we've got 8 more of these videos, and I hope to add just as much value in each of those other 8 videos. I do think you'll find that those videos useful. So just go to the Astranti website, see what we've got available for you on there in detail, and you can purchase the other videos and watch those other videos on there. If you decide to go down your own route, let me just give you a bit of advice. If you're going down that and you're not going to get the other videos, look, notice what I've been doing as I've been going through this. Okay, I've been picking out the key points section by section by section. I've been relating those to the theory, to the E3 models in this case. But then when we get to F3, we need to relate it to the F3. And when we get to P3, we need to relate it to the P3 models. So you go through, think about it first from an E3 point of view, create all your models, then go through it from an F3 point of view, thinking about the relationships there, and then a P3 point of view. And by the time you get to the end, you do some analysis of the numbers, you will have got a really good analysis of this case. So you can do it yourself, and I do hope that you do that in detail. Although, of course, I do hope you will find enough value in it to go ahead and listen to my views on the rest of the case and the rest of the models and that as well. Okay. Great, that's the end of this video.